Hello and welcome to this new edition of our investment strategy series. 4 months after COVID-19 sent shockwaves through the global economy, the pandemic is still with us. But things have changed. We have now more robust public health tools and a better understanding of the virus. Many economies in Asia and Europe have acted decisively and are now reopening. Others, such as the US, Sweden, and some emerging countries, were unwilling or unable to impose stricter measures. As long as the virus continues to spread, the outlook is more challenging for these countries and regions. Still, despite the uncertainties, the time for economic healing has come. The question for investors is, what will it look like? So far, we've seen a surge in activity as countries reopen, but some sectors, like tourism, will rebound much more slowly through 2021. We are monitoring the recovery using real-time big data tools and expect global activity to return to 90% of pre-COVID levels by the end of the year. Thanks to unprecedented policy support from governments and central banks, which creates a safety net for jobs, companies, and markets, most economies will pull out of the sharpest recession in modern history in the third quarter of this year. Now, we cannot completely rule out a second pandemic wave, a premature end to policy support, or even protectionism. But we are confident that the new outbreaks will be locally managed without shutting down whole economies. In the longer run, the challenges of slow growth, high debt, low rates, and rising inequality will still be with us. So let's now turn to Stéphane to find out how this is shaping our investment strategy.
Optimism surrounding the recovery that Samy just described and monetary and fiscal stimulus of historic proportion have propelled equity markets to what we consider to be fair value. But without a medical breakthrough, many uncertainties will remain and investors need to stay alert. We need to ensure that we can manage more volatility with an appropriate mix of risk assets and protection in our clients' portfolios. Sharp market moves of the past have underlined the importance of staying invested in equities. We keep a sizable allocation favoring US and Asian stocks as well as IT and healthcare sectors. In fixed income, given low yields and low growth expectation, it makes sense to have exposures to investment-grade credit and select high-yield names. In emerging markets, we favor countries less affected by low oil prices and the pandemic. We also see potential in real estate as well as infrastructure. And to ensure that our portfolios are protected from the unexpected, we continue to hold gold, the Japanese yen, US treasuries, and when adequate, put options on equity indices. Such a positioning has an asymmetric profile, which means that our clients' portfolios can benefit from the upside whilst remaining reasonably cushioned from the downside risks. Beyond these tactical choices, we also want our client portfolios to benefit from long-term trends, starting today. We have identified 4 sources of structural growth post-COVID-19. First, digitalization, which implies a higher allocation to technology companies. Second, demographics, with an impact in automation, healthcare, and consumption. Third, the emergence of China. China represents 20% of the world economy, with growing geopolitical sway, but its share in global market indices is still too low. Therefore, investors need to build specific exposures to Chinese assets. And finally, we must act quickly to decarbonize our economies and invest in solutions that help with this climate transition. As we enter the third quarter of this transformative year, economic healing has begun. But the pandemic is not over, and investors' sentiment can shift in the face of fresh challenges. Next in line of events with important application for markets are the US presidential elections. And of course, there will be more inevitable surprises that will challenge our views of the world. There is no alternative to ensuring portfolio resiliency and nimble tactical responses to weather not only foreseeable events, but also less predictable developments. Stay well and safe until our next update in late August. Thank you very much for watching.